Hey everyone, welcome back to the channel. Now last week I would say was a win for the market because Dow Jones was up 2.27%, S&P was up 3%, and NASDAQ was up 2.54%. So overall, not too bad for the market considering when we were entering the market last week, it looked pretty doom and gloom. The coming week of January 31st is filled with a lot more catalyst, and as an investor or trader, something to keep in mind as you go through the next week. In today's video, we will take a look at the past week's performance of the index. We will go over some earnings highlights of the following companies: 3M, Boeing, McDonald's, Robinhood, Visa, Caterpillar, and Chevron. I have already made earnings recap videos for Tesla, Intel, and Netflix. The link will be in the description. Also, I have the earnings call from Apple and Microsoft as well on the channel, so definitely go check them out. Additionally, we will also look at our public portfolio's weekly performance on see which stocks went up, which stocks went down. And lastly, we will cover the upcoming catalyst for the next week. All these topics will be timestamped, so you can skip to whichever topic you like. Now, if you get any value out of today's video, don't forget to hit that like button. So without further ado, let's dive in. Now, before we proceed, folks, this is not a financial advice for you to buy, sell, or hold any of the companies listed in this video. Always do your own due diligence before you invest your hard-earned money. When we started the week, on day one, Monday, all the indexes went down. And this is where it was causing a lot of panic among the investors and traders. However, as we talked about that all these earnings which were supposed to come out last week, and specifically two companies that are the biggest companies in the world, Apple and Microsoft, have the capability to pull that market up. Now, if you haven't seen my last video where I talked about them, you can check it out right over here. And as you can see the trend over here, as the earnings were reported on Tuesday and Thursday for Microsoft and Apple, we saw the market coming back. Both Microsoft and Apple delivered exceptional quarterly results, even though they had supply chain issues. And overall, we ended up with a higher percentage at the end of the week. Going into next week, we have some major earnings coming out as well for companies like Amazon and Facebook, which will of course drive the highlight for next week and will have a major impact on how the market moves next week and the following week. Let's jump onto the earnings recap for some of these companies. We'll start off with 3M. It's one of the most popular dividend paying companies. So if you are a dividend investor, 3M might be in your portfolio as well. In the last 5 days, 3M went down 5.53%. They announced their earnings on January 25th. They beat their EPS by 29 cents. Their actual GAAP EPS was also, they beat by 29 cents. Their revenue came around $8.61 billion and the revenue surprise was about $31.63 million. And if you look at their earnings history, 3M has been beating their revenue from the last couple of quarters. They did have few misses back in 2020, June and September, but since then they have been consistently beating their quarter over quarter earnings. Now the reason why 3M plunged 5% was because they lost the earplug verdict and JP Morgan sees significant liabilities on the company. So the lawsuit is about $110 million and the jury awarded the award to the US Army veterans over the combat earplug said to cause hearing loss, which the company says it will appeal. So after that verdict, JP Morgan analyst says that 3M could face significant potential liability exposure that is underappreciated by investors and comes on top of lingering PFAS liability. From their simple math, they're calculating that this could be as big as $10 billion of an impact on the company. So if you own 3M in your portfolio, let me know in the comments what do you think about this particular verdict. So as I understand that there will be further appeals to this verdict and this is not a final resolution. If the further appeals also go against 3M, we could see a big liability on this company in the coming years. Moving on to Boeing. Boeing also went down 7.24% right after their earnings were announced. They reported their earning on January 26th. They missed their EPS by $7.53. They had a loss of $7.69. Their revenue actuals came out to be about $14.79 billion. If you own Boeing or you have been following Boeing news, we know that Boeing has been plagued with a lot of issues. First with their 35 MAX, pandemic hit, and then all the flights were grounded. So Boeing has been having a couple of rough years from now, and the stock was down from the highs of $300 to $90 at one point in time. The consensus of loss was about 16 cents, but the company lost $7.69 per share. If you look at some of the last quarters, the revenue that they have brought in, it's been pretty much in line. In the last quarter, they brought $15 billion. Before that, they brought 17. But this quarter, they could only bring $14.79 billion. However, not all is lost for Boeing, because Boeing's Q4 net loss fell by half to $4.14 billion from $8.42 billion in the prior year period. But it took $3.5 billion to charge to cover additional delays in 787 jetliner. The company also said the problems with 787 will add $2 billion in the unusual production cost. But the most encouraging news about Boeing is that the Q4 operating cash flow swung to positive $716 million from a negative $4 billion in the year ago same quarter. As we can see that if you are a Boeing shareholder, considering how many issues Boeing has been dealing with, having a positive cash flow is looking like a good sign of recovery for Boeing. However, we are still not out of the rough waters for Boeing. I still see that it will take a couple years before actually Boeing could go back to its all-time highs. And it's going to be a long hold for this stock. One of the ways you would see Boeing is improving is the time when Boeing will bring back its dividend. But I don't see that happening anytime soon. Moving on to the next company, McDonald's. McDonald's is in my top 10 list. If you haven't seen the video where I talk about the top 10 stocks, check it out right over here. In the last 5 days, McDonald's was up about 0.59%. They reported their earning on January 27th. They missed their EPS by about 11 cents, and their revenue surprise was about $19 million with a revenue actual of $6.01 billion. The previous quarter, McDonald's brought in about $6.2 billion in revenue. Prior to that, it was $5.89 and $5 billion. This quarter, they only brought in $6.01 billion. That's why it's a miss of about $19 million. Year over year, they are still growing at 13.08% as of last year, the same quarter. One of the key highlights of this earning was that the operating income was 12% higher to $2.4 billion during the quarter, and net income was up 19% to $1.64. Even though we had such a promising results on the operating income, the stock still fell short of the expectations. Moving on to Robinhood, which is one of the most popular stocks among retail investors, and it is also part of our public portfolio. If you want to check out which other stocks do we have in the public portfolio, check out the video right over here. In the last 5 days, the stock fell about 1.93%, and it even touched its all-time lows right after they reported earnings. Robinhood reported earnings on January 27th. With the EPS, they missed by about 19 cents. Their actual revenue was $362.71 million. The consensus loss was about 30 cents earning per share, but they lost more than that. They lost 49 cents for this last quarter. As most of you would know, Robinhood IPO'd last year, so they don't have much earnings history. But looking at their last 3 quarterly earnings, the first quarter when they reported earnings, their revenue was $565.33 million. To the next quarter, they only brought in $364.92 million. So that was a significant drop in the revenue for this company. And this quarter, they brought in around the same level of $362 million. So from a revenue standpoint, the revenue has not gone back up to the first earnings that they reported. Also, they missed more on the earnings per share this quarter versus the last quarter. The main reason why Robinhood stock price fell to all-time low was because their future guidance was very soft. They are expecting to bring in less than $340 million as opposed to the consensus of $438 million from the street. The main reason for this forecast from the company is that they see that some incremental improvements in trading volume versus what they have seen so far. Also, they see an outsized revenue performance due to heightened trading activity, particularly related to certain meme stocks. The meme stock craze, the crypto craze, was at its peak last year, and Robinhood was getting the most of the benefit of this kind of frenzy. Since then, we have seen tighter controls on the growth stocks. We have seen tighter controls on the cryptocurrency, which is causing a decline in the interest from the retail traders, and that is clearly visible on the Robinhood's stock performance. Next up is Visa. Now, Visa is one of the most popular heavyweights in the financial services when it comes to payment processing. However, Visa is not one of those retail favorites like Square or PayPal. Visa had a 10.72% gain in the last 5 days after the earnings was reported. Visa also reported their earnings on January 27th. They beat their EPS by 11 cents and they brought in a revenue of $7.06 billion. Not only they brought in $7 billion this quarter, it was also the biggest quarter for Visa. The CFO provided strong guidance for next quarter because they expect the cross-border travel recovery to resume in February, and they expect that the financial year 2022 is off to an excellent start. We expect our growth this year will be well above the pre-COVID rate as cross-border recovers. This will likely to continue into fiscal year 2023. Of course, we know that Visa is a heavyweight when it comes to payment processing. They were also impacted by the pandemic. As we see the recovery happens in the economy and travel resumes, we will see Visa, MasterCard, and other payment processing systems to have a very strong year moving forward. The next stock, which is our infrastructure play, is Caterpillar. So Caterpillar fell about 6% in the last 5 days. Reported earnings on January 28th. They beat their EPS by 43 cents and they brought in a revenue of $13.80 billion for the quarter. Though this is not the biggest quarter for Caterpillar, they still beat the revenue estimates by $576 million and they beat the EPS by 43 cents. Now, the reason the revenues are up is because they do see strong demand for its heavy machinery and construction equipment, but because of the higher manufacturing costs, it is impacting their margins. Now, Caterpillar is not out of the woods yet because they are also predicting that they expect the China demand to decline because there is a slowdown in the construction market. Now, this goes back to the Evergrande crisis. As the market slows down in China, it not just only impacts the Chinese companies, but also impacts all these international companies who are providing equipment and services to the Chinese companies. Moving on to Chevron. Chevron stock price saw about 2.92% increment in the last 5 days. Chevron reported earnings on January 28th as well. However, they missed their EPS by 56, reported 2.56, and they brought in a revenue of $48.13 billion. And as we know that year of 2022 and 2023 is the year of energy, we expect Chevron and ExxonMobil to do very well. Chevron brought in a revenue of $48.31 billion as opposed to last quarter they only brought in 44. Now here are some of the reasons why the stock fell even though they reported decent earnings is because number one, they said that LNG was a source of fundamental and cosmetic headwinds this quarter. Management guided to higher LNG profits on quarter 3 call but under-delivered operationally on volumes, falling to sell spot cargoes at record price in the quarter. They ended the quarter with 2 cargoes on the water, and although these cargoes are to be sold at very high spot prices, they were marked for accounting purposes at lower annual average prices. Moving on to our public portfolio update, and in this last week, we actually lost 7% in our portfolio. We lost about $140. Gainers for the week were XLE and XLF. Those are all ETFs. One is an energy sector ETF and the other one is the financial sector ETF. All the other stocks like Wale, GGPI, Hood, CHPT, Ford, Pinterest, SoFi, AMD all fell last week. Now here are some of the catalysts that are going to drive the market, whether up or down. Number one is we are seeing that there's an increased options activity on companies like Hertz and Oatly. We are also seeing a special interest in the Reddit group companies like Roblox, Square, and Lucid Motors and AMD. We also see that the short interest has increased in companies like Blink, Workforce, Nikola, and Lordstown Motor. So this will be a very interesting watch for these specific companies. Now AMD is also set to report earnings next week, so we'll see how that plays out. We will be paying special attention on companies like Facebook and Amazon because they have the ability to drive the market up and down. We will also take a special look at GM and Ford because first, Ford is in our public portfolio, and secondly, we want to see GM how they are progressing with their EV segment. Another interesting note on electric vehicles is that next week, the Chinese EV makers like NIO, XPeng, and Li Motors, they are going to report the delivery numbers. The Morgan Stanley wants that the January numbers could be soft because of the Chinese New Year. We are also going to see a 2-day event of MicroStrategy World 2020, which will feature several keynote addresses that will talk about the outlook for Bitcoin. MicroStrategy CEO Michael Saylor, who was called as Sailor Moon by Elon Musk, is going to be hosting a Bitcoin for Corporation panel that will include Jack Dorsey from Square and Silvergate Capital Alan Lane. Tesla will not have a representative at this event, but the company just reported no change into its Bitcoin balance sheet. The next event that we want to watch closely is the OPEC and non-OPEC ministerial meeting that will take place via video conference. Oil prices are going to be driven by this meeting, and the decisions that come out of this meeting will impact the oil prices. And the last catalyst for next week will be the job report, where we expect to see an increase of 178,000 jobs. So which of these catalysts do you think is going to impact the market positively or negatively? Let me know in the comment section below. Now, if you found any value out of today's video, don't forget to hit the like, click on subscribe, and ring the bell notification. I will see you next time, Investor Family, but don't forget to invest for tomorrow.